Hi, this is Brent from TradeGuild.blogspot.com, and it is Wednesday, August 30th. We survived the hurricane, we still have power, and I'm a little out of connection with events the last couple of days. I've been doing other things, but let's take a look at the market today. We were talking about on Monday, I posted a video talking about the S&P 500 and what I saw as being a pennant on an hourly chart. And I'm going to go ahead and pull up that hourly chart. And I was expecting a breakout from that pennant. And here is the pennant that we were talking about on Monday's video. And there's the breakout. Here's the pullback. And it's doing a little something in here. So this formation, these kind of pennants and triangles, ascending triangles and stuff like that, they weren't working very well. The bullish ones weren't working very well in the last month or so, or last couple months rather, and all of a sudden they are working again now. So in the short term, it looks like the S&P is ready to go. It looks like it's ready to rally a little bit more maybe. And in the longer term, though, we see some trouble brewing here. If we look at money stream here, that's the indicator in red. There are multiple divergences on it. Right now in the very short term, you can see between this level and this level, as prices going up, it's in gear. But when you start to look at it as compared to this level back here where money stream is, it's a little bit lower now, and the price trend is actually up, and money stream is pretty flat relatively speaking. So while it's in gear here on the short term, it looks like intermediate or longer term there's some problems here. It can carry on rallying with this divergence, so I kind of expect these May highs to be taken out, and kind of the idea that I had was that the typical summer rally that starts between May or June here, typically over the last several decades, it's 9.4%. So 9.4% puts us a few points actually above this May high. So I think by September we can probably take out that May high, but I don't see us going much further than that until maybe late fall, early winter. If we also look at, let's see here, the MACD indicator down here in blue, there's another sign of trouble that's kind of brewing. And typically, this is a pretty good indicator for spotting tops or bottoms. And what we're seeing here is as price is continuing up, this MACD indicator is it's heading downward. It's got a downward slope. Each of these successive peaks is lower than the previous. So again, this kind of confirms the idea that we can rally a little bit more, but there is some trouble brewing there. And also take a look at volume. You can see as we rally up, the volume has been heading down. Largely, that's a function of August being the last 2 weeks of August, everybody being on vacation, and it being historically the lightest 2 weeks of volume in the year. But August historically also is a very bad month, as well as September, I believe the two worst months of the year. So this market has been rallying into those months, but not on very convincing volume at all. Let's take a look at the Dow. Let me just pull it up here. And what we see here is kind of a almost the same type of picture. What we were talking about on Monday's video, I was saying I'm looking for a breakout from this little flag consolidation that's being put in right here. And there's the breakout. It came, the next day, more or less. And it's right here. Again, though, we're seeing diminishing volume. We're seeing a divergence here in MACD. And also, if we just skip on over to the money stream and all those other indicators, we're seeing similar trouble here. In the short term, we're making higher highs in price and pretty close in the indicator as well. But on a relative basis, where price is over here and money stream, that's virtually the same spot. Price has gone up, and money stream in this case has actually slightly gone down. So what we're seeing is less conviction behind the move. Price can still advance, but it's advancing with hollow conviction from money stream. So we also can see this on multiple time frames, and that's something you want to check also for confirmation. So if I swing this out to a daily chart, again, that divergence actually becomes more pronounced with money stream on this slope and price on this slope. So money stream down, price up, and even on a 3-day, it even becomes more obvious. So here again is price and money stream, and here's higher price, and money stream is really sloped down. So all in all, I think our basic premise probably is going to hold true, that we have a little bit more advance maybe, but in the intermediate or sub-intermediate trend, we're in a little bit of trouble coming up. Let's take a look at the NASDAQ. And the NASDAQ actually, was not holding up well at all relative to the Dow and the S&P, and now it's seeing some leadership. So what we were talking about on Monday's video in the NASDAQ was this bull flag that had consolidated here. Let me get up my marker. There's the flagpole. There's the flag in here. And we were talking about on Monday that we expected to see, and I think I made these videos Sunday night, so I talked about expecting to see a breakout from that bull flag, and that is a bull flag. It's slanting downward into the consolidation with a lighter volume right there. In this case, MACD is actually looking pretty strong. It's looking better. You see we have a positive bias to it, as well as price moving up. So I think that's part of this leadership that we're seeing into tech. It's a sector rotation out of the cyclicals and out of the more conservative issues, out of the commodities and energy, and back into tech. So that's something, this rally had been lacking up until the last several weeks here. If we take a look at the accumulation distribution indicators, we can see a small relative divergence between these 2 points, but it's not as pronounced as what you're seeing in the S&P and the Dow. If we just compare on a relative basis how the NASDAQ is doing with the S&P is in red and the NASDAQ is in white. You can see, through June and July and into the first part of August, we were really seeing the S&P outperform the NASDAQ, and it doesn't show up on this scale yet because the NASDAQ just kicked in, but it is actually outperforming the S&P the last couple of weeks. So what's going on tomorrow? We have same store sales are out for August tomorrow, and we had the Cisco warning on profits. So I think some of the retail sector is suffering now. There's a talk of the slowing economy, and like we said before, there seems to be a sector rotation into tech, some bargain hunting. It's a beaten down sector. There's possibly some moving out of oil, out of energy, and into tech. Also tomorrow we have the PCE index, which is the Fed's favorite inflation index. So, we could see some volatility tomorrow depending on what that report says. I just want to show you real quick a chart of oil. Let me see if I can get the symbol right. Okay, here we go. This is light sweet crude oil. And I've got a trend line drawn in here in red. You can see it's been on a major bull market, and it looks like it's going to pull back right now to the $67 level right in here, which also coincides with that 200-day moving average. So we saw prices above 60, or above 76, and now it looks like we're going to head down a little bit. We'll see what happens here at that 67 level. We have been talking recently about the correlation between housing tops and commodity tops, whether or not energy is going to be affected to the same extent that steel and other things are going to be. We don't know yet, but light sweet crude oil is certainly pulling back at this point, and I'm looking for a target price of $67 within the next couple of weeks. I am going to continue the videos tonight. I've got some follow-ups off that August 27th video, 28th video, and a couple new ideas, long and short, so we'll be right back.